Kathryn, are you bullying the Fed? Like, is this what you've done to the market?
Alex, you're totally right. I and everyone else, we're all bullying the Fed. The Fed is going to cut rates because the market so demands. Anytime the market is pricing in more than 60% probability of a Fed cut, the Fed has not failed to deliver. So certainly this is a Fed, Alex, that wants to extend and expand this economic expansion, keep the rally going in the markets. They do not want to repeat what happened in December of last year when we all know what happened, almost 20% top to bottom correction. This is a Fed that's loath to change the direction to the downside. So they're willing to risk cutting when they maybe shouldn't, just to keep the rally going.
Hi, Kathryn. This is Alessio. Do you think this is a one and done? This is the final adjustment to the calibration that they've been talking about? Or is it eventually one step towards a prolonged easing cycle?
Well, it should be a one more cut and done. That's what I think should happen. But I think, too, that this is a Fed that's wholly dependent not just on their dual mandate, which is, of course, both full employment and 2% inflation, which they've attained, but to a Fed that thinks itself has a more expansive mandate to extend the economic expansion, to bring credit to people that don't otherwise can get it. I mean, this is a Fed that has a more expansive mandate and considers itself, in my view, a Fed not just for the U.S. but for the globe. I mean, how many times have we heard in the Fed's communique and in the statements and in the minutes that the Fed is watching very closely global economic data points as well as trade. Trade really hasn't had an impact on economic data in the United States. It hasn't heretofore. So really the Fed doesn't have to cut an additional three times, which is what the Fed, Alessio, as you know, or what the market is currently pricing in.